Hey, Pump Town, how you doing? Hope you're all doing great. Got NQ update, public, we're set. Wow. Happy days, happy days. It's the end of the month. And what do we got going on? Well, let's do a little recap. April, holy shnikey. It looks like our seasonal tendency change happened in April. So I'm really pleased with what materialized from this. So we wiped out the entire contract's liquidity. Just in the delivery for this contract here, just completely wiped it out. That wasn't unexpected. Because if we're bullish for the presidency of Trump with all the money and everything coming in, we would anticipate a Judas for the year. Now, our algorithmic year starts in April. And, the candles year or 12-month cycle starts in January. So, in any case, whether we have our candle opening here for the year or April's open here, we've made a very handsome Judas swing for the downside. So I love this. This is everything we wanted to see. And when we were down at $17,000, $16,000 price range, there was a lot of doom. And if you're following anybody else and they were just completely offside the entire time, just don't forget to keep score, because the people that you are following might give you some toxic ideas that you latch onto. Like, for example, my very first mentor told me don't catch falling daggers. So because I respected him and his opinion and I was learning from him, I was like, yeah, that sounds kind of spooky. I like my fingers right where they are, right? I'm not a knife juggling circus clown. Well, now I'm a frickin' knife juggling circus clown. Honk, because that's all I do is catch daggers. Like, it's the best thing ever. So, you might share a similar experience where you're learning from somebody who has their set, where they're set in their ways, but then you discover something that, you like that they don't like. So, just point being, make sure you're keeping score. So, when we closed this candle bullishly here, after wiping out that entire, just leveled the entire field there, she closed here. So, once that sensitivity was shown to me, because look, it's all about the closes of the bodies. So when we were ripping through that candlestick, the down close one, it looked like doom at the time, but once we closed it, it was like, oh, what happened after we came and ran out all that liquidity? It showed us a willingness to not want to close down here. If it had closed down here or down here, then it would have left a fair value gap, most likely. I mean, it did leave one, but we've now closed above it. Inversion fair value gap. But if it had closed down here, we could have deemed a structure shift, or rather a break in market structure, higher time frame, because that's a swing low getting taken out. However, Look at where the close was. It's way up here. So I would, if I was looking at this in, let's say, a 15-minute chart, and I was looking for price to rip up to this double top, I'd be thinking, okay, well, I broke one PD array, fair value gap, then I'd be looking for a breaker or a volume imbalance or a mitigation block. How many PD arrays am I breaking? Well, not very many. And I'm definitely not at 3 yet. 3 any important ones, especially with that close there. So when we were coming, if you're like trending upward and you're thinking to yourself, well, is the run over? Is that a break in structure? Or is that just the best buy signal liquidity grab ever on the planet? Apparently, it was option B. Pretty sweet, huh? So once it closed, it's saying, I would like to go up now. So because it dipped down so hard, I was expecting May to be quite ruthless in its delivery back to the upside and front running the swing low, the potential swing low, because often you'll get this where the third candle that confirms the 3 a swing low, it'll be way the heck up here. That's a lot of that's way too much gap risk for a trade, right? This one here, that's the second candle, the higher low closure here. That's a little bit closer than that, right? This here, these 3, swing low, closing here, not too bad. But then when you're way up here and that tail is way down there, that's huge and that's annoying. So you kind of got to get the idea that you're going to front run, that this is going to snap out. And how do you do that? Let's drop time frames. So we were dumping here and we're looking for, traditionally, we're making the low of the yearly candle in April. And so far, so good. So that was the expectation. Now, this was the annoying part, was this candle didn't get the close above the down close candle quite yet. So just like I was showing you guys in the PM session this afternoon, waiting for that candle to get the close above, even if it's a few candles later, you're just still waiting for that. So finally, getting the close above the down close candle, that's that order block in the monthly time frame. So we had a swing low here, and then May opens up here. So this is like 2 swing lows in the weekly, front running the idea that the monthly candle is going to blast up. So when we were in our discount here, you're marking off your premium and discount. And you're trying to get long off of a discount array and then take profits at a premium array. So, in the weekly there wasn't much, but finally here, look at the precision here in the weekly time frame. Measure the drawdown in your entry technique, okay? 121 handles. Now with the volatility index so high, this is kind of normal, but think about your model in that candlestick's tail, this one here, in that low. There would have been a very good model for you to get long off of to catch the bottom of that candlestick. Now, that is your discount array, bullish order block. There is an indigo entry model here in concert with this candle's closure above the 2. You could decide which one you'd want to get in on. More importantly, that monthly order block here. So very smooth and very cool. So once you reach up into a premium market, you're wondering what you're targeting. Well, obviously, buy side liquidity. So that was just an obvious one. And there was this fair value gap here we were eyeballing. I kind of cheated. It's supposed to be here. So it left a little piece of it open. So here's a premium fair value gap. And here is a discount order block. So discount to premium. And this is where you're getting your bias from. So then you drop time frames. And you're going, okay, well, now that I have a good indication price is going up, then I want to get in sync with that trend. So I think it was yesterday in the members session I was mentioning I am not convinced that the top is in, and I was looking for another snap up into that premium array, and it was specifically this guy here. And unfortunately, it did it after hours outside of my trading time. So I was out of the house and I came home and my wife's like, hey, did you see NAS? I said, no. She's like, look at it. It just opened up and ripped. And I was like, lame. Yeah, not lame in the sense that it did it without me, but awesome that I was, on side for it, I guess. It sucks when you're not a part of it, but it's part of the job. So, getting in sync with this trend. So we had a swing low in the weekly time frame, and now we're going to look for the higher low in the set. And that was here. Came down for that discount array. Kind of the bullish order block here. It fell shy of it just a little bit, but that's fine. And then closing above the down close candle here. And we had a new day opening gap here on this guy, and it came down for it and dapped it, and that was it. She went from fair value straight up to premium market. So this bear flag here is what we were attacking. Now, it's not that the bear flag didn't play out, because clearly it did, right? The fact is that people were so dooming on that Trump news that they were claiming recession and everything's going to tank, blah, blah, blah. Well, they didn't pay themselves, and they leave themselves exposed. So that's why price would want to go and run them out. So you're looking for a discount array to get in sync with and key off of in the discount array, in the discount market. Bam. Beautiful. Institutional order flow entry drill in the daily time frame. Runs up. Tags buy side liquidity here. Bearish order block, and here's the higher low in the set. Following the trend, higher high, higher low, and that indigo entry technique was what blasted price. Look at how strong it was. That new week opening gap, it opened and just chose violence. That thing's been haunting me since its creation, so we're going to keep that in the back of our minds moving forward. And then so once we dapped into that target here, of course, we've seen a little bit of stagnation. So the other day I was mentioning, it really looks like it wants to run up into our premium target. And this here, people would be claiming it over. Now, because it's not in that price point that I'm really looking for, that swing low there, just like in the weekly time frame, even though we're in a premium, still materialized a shot up into targets. Beautiful, beautiful delivery. And that was our beautiful month, and how we forecasted that candle blasting off into the sky. Now I'm going to take the whole month range and turn on my 20 to 30% retracement, hop into a 15-minute chart, notice where we've retraced to. So my expectations for this entire month have been met. The open, the low, the high, and the close. Everything is met. So what would I be looking at for tomorrow? Nothing. I'm going to take a long weekend off, and I hope you do too. Hello. Wild berries, you funny. Yes, hello. Well, God bless you all. Thank you all for joining. I hope you found this one insightful, and we'll see you next week. Peace.